Mahanagar Gas now. Its CNG volume growth remained muted at just 4% on a year-on-year basis, and there are fears that infrastructure issues could continue to limit volume growth further. SM Ranade, the CFO of the company, joins us now on the phone line to talk about that. Mr. Ranade, there's absolutely no visibility as far as volume growth is concerned. Can you tell us what exactly the trajectory could be in volumes over the next couple of quarters?
I think there has been a growth in CNG segment as well. If you see 9 months results for 16-17 versus 2015-16, the CNG growth has been 5.5%. And you will have to note that this 5.5% growth in CNG segment which we have achieved is in spite of degrowth in Q3 of 2016-17. There was a degrowth of minus 2.7%, almost 3% as compared to Q2 results in this current year. Partly it was due to demonetization impact. But in spite of that, 5.5% growth has been achieved. So I don't think there is really a big concern about the growth in CNG. And even in PNG for 9 months 2016-17, we have clocked a growth of 6.1% as compared to previous year. So I think that things are pretty in line with what has been expected.
No, Mr. Ranade, IGL showed a growth of 12% in volumes. It is only in comparison that one wonders why Mahanagar is in, mid-single digits or even low single digits. Is there an infrastructure issue? Only 9 pumps have been added in the 9 months.
There are definitely some space scarcity issues in Mumbai. And we have always been saying that in the region of 16 plus pumps we'll be adding every year. So far, right up to December, we have added 9, but we are pretty confident that by the end of this financial year, we'll be adding 15 to 16 pumps. That is on one hand. Secondly, one should also note the difference, fundamental differences between IGL operating at Delhi and NCR region versus Mumbai or MMRDA region over here. The differences are the model of MGL. Business model is basically based on economics related benefits. Whereas apart from economics related benefits in Delhi, I think a lot of growth is also coming up due to some judiciary interventions or regulatory interventions which are followed through NGO activists and other things. For example, I can tell you one example. Recently, I think fuels like pet coke or fuel oil, these have been banned in NCR regions, whereas in case of Mumbai region, these fuels are pretty commonly used. And if you notice in our industrial customer category, predominantly the fuel used are cheap dirt fuels like LSHS or fuel oil. That is also to some extent restricting the growth over here.
Should we expect margins to stay around these 30% levels itself or fall perhaps, because domestic gas prices are expected to rise by the time we head into the second part of the year?
I think when we talk about the margins, first of all, we should note that currently we are talking about gross margins. We have reached a level of nearly 49% as compared to previous year 39%. Or if you talk of EBITDA margin, today we are nearly at 32% versus 24% previous year. Even PAT margin are nearly 19% versus say 14.5% in the previous year. I am talking about 9 months comparative results. So this background we need to keep it in mind. But that said and done, I think we hope that margins will be steady in domestic and CNG customer categories. You are right, to some extent there will be increase in gas costs, particularly in domestic and CNG customer category. But we hope the margins will be steady in this business. And as regards industrial and commercial, probably there could be some upside awaiting for the company, provided, of course, there is some upward movement in Brent levels. We see that as compared to earlier few months, there has been some upward movements in Brent movement. As a result, the prices of alternate fuel oils like LSHS, FO, etc., which earlier we talked about, may go up in MMRD or Mumbai related regions. And if that happens, there could be some upside for industrial, commercial customer categories. And at the same time, I think the spot, though right now it was pretty costly, particularly January, February, we did suffer because of the spot gas prices. But I think in the coming months, it should come down. So that will also help in boosting industrial commercial margins.
So very quickly, if you can tell us, what are you going to do with your cash of 560 crore?
We are number one open for all options. I mean, if any good opportunities come up on M&A acquisitions, though right now nothing on table at a very active level, but we are open for that. Secondly, there is a huge amount of expansion opportunities available in Mumbai region or our authorized regions itself. For example, if we talk of mainland Mumbai, we are at around 25-30% penetration level. So good scope is there over in Mumbai region. Even in the adjacent areas of Navi Mumbai, Kalyan, Thane district, what we refer to.
Fair.
There is also similar type of penetration is there, and maybe 2 years down the line there will be new area of Raigad district which will be coming up, because there has been some announcement about new airport also coming up now, formally really launched. And I think that will give us a lot of opportunities for further expansions. And there are some bidding rounds coming up from PNGRB, our regulator. We will be actively participating in those rounds as well.
All right, Mr. Ranade, thank you very much for joining us. We'll leave it